have Rakshit Ranjan of Marcellus Investment Managers joining us. Hi, Rakshit. Good afternoon to you. Thank you so much for taking the time out and joining us today. Rakshit, in the last three sessions, we're seeing some good moves, good recovery coming in the market. Specifically today, we broke above the 22,900 levels. Do you see now we are fairly priced? The valuations are getting better. As far as India is, we're now trading approximately at 18.5x, which is more or less, less than in line with the 10-year average. We are now below the 5-year historical average also. Are we really priced to perfection now? From here on, do you see the green shoots coming back?
Yeah, certainly valuations compared to where they were 6 months ago are significantly better. At the same time, earnings profiles of various parts of the stock market compared to 6 or 12 months ago is also very different. 12 months ago, it was a broad-based earnings profile of the market. In many industries, that has now changed. The cyclical highs are behind us, and you might be headed for more modest earnings growth in many of those industries. So when you combine the two, I think from a broad-based market, historically, we see the market being far more stock-specific oriented, narrow, quality-oriented, and hence stock picking becomes even more important going forward in the next 2-3 years from here on, the way we see it.
Rakshit, good afternoon. This is Shrishti also joining in. But in the recent fall, Rakshit, help us understand that how have you placed your bet? How did you manage to tackle the volatility? Anything fresh that you have added in your portfolio, or where you have exited your positions?
Yeah, we've in the last 8 to 10 months, we've made a few changes around taking more rural exposure, given that area of the economy likely to do better. We've increased our exposure to healthcare through hospitals and diagnostics. We've also increased exposure to industries where large unorganized to organized potential exists, and there are company specific strengths. And finally, a high exposure to exports of products and services based on IP, particularly. I think that's where we've increased exposure, plus retaining high quality financials, including lenders and insurers in the broader portfolio.
Right. Rakshit, also, now that you spoke about how one has to be very sector specific or very stock specific rather, so a very bottoms up approach there. But, when this dust settles, there will be new sectoral leaders, there will be different leaders this time round. And now that there is certain valuation comfort also, what are the sectors you see leading the charge? Do you see that valuation comfort with the banks and financials? They have been outperforming the benchmarks in the last few sessions.
Yeah, those are different answers to your question for different sectors. So when it comes to lenders, I think till a year and a half ago, high quality lenders weren't able to outperform the rest of the lending space. We see that changing, where the quality of lending, the quality of deposit franchise will matter far more in the next 12 to 24 months than it did in the last 24 months. So that's on the lending space. There are certain sectors where I think it's worth putting the onus of driving the share price growth through better earnings than the broader market, which is where, as I mentioned, so for instance, within the broader consumption space, more rural-oriented plays should do better. I think there are lots of tailwinds to the broader healthcare piece as well, where healthcare insurance penetration and hospitals alongside. There are intermediaries also listed in the healthcare side. Whoever captures the value the best in this piece, it is not linked to broader economic moderation in growth. That's where I think you should see some earnings. exports should benefit, not just because of the dollar depreciation, but also because of various geopolitical events happening, which might create some winners. Whilst we might also have some headwinds to some of the incumbent export plays. So stock selection along those lines, I think in these 3 or 4 sectors should drive healthy earnings and share price momentum.
All right, but Rakshit, let's deep dive into the point you're making with related to some of these export plays, because there's a lot's been happening in the global markets with respect to tariffs and concerns. So within some of the plays related to the export oriented, give us some sense that which are the pockets where you're finding opportunities, because a lot of these sectors, be it IT, be it pharma, be it some of the specialty chemical plays, they are having a bit of a concern that what will happen if Trump goes ahead with the tariff implications. What are your thoughts? And within exports, which are the pockets that you're finding opportunity?
Yeah, so I'll take an example. So one of our larger exposures in this space is to Divi's Laboratories. Now, Divi's is a proper IP-based pharma company. It's not formulations being sort of branded and sold through a standard distribution network. That's not the kind of export pharma here. Here, it is manufacturing excellence, which is unmatched for the big pharma's value add provided by Divi's. In a way that not just other Indian competitors, even at a global scale, the IP is difficult to match. The demand is very resilient, structurally high. Supplies are not just to the US directly; they are in many cases to European countries. To a great extent, the geopolitics here can be either a neutral or a slight positive rather than a significant negative, the way we see it. So those are examples, but yeah, as you mentioned, as I previously mentioned, there will be a lot of headwinds also in the export area, which we'll certainly try to avoid.
Rakshit, also, as I can see, surrounding the concerns in the broad-based correction that we have seen in the small and the mid-cap space, you have increased portion of cash balances in both your little champs and your rising giant portfolios. Now that we have corrected fair bit as far as the SMIDs are concerned, do you still see froth left? Do you still see them trading at a premium, and do you still see more pain in this particular space, or do you see now that once again one can look at the SMIDs for a buying opportunity?
So as I mentioned, there are pockets where earnings growth for SMIDs and for the broader economy and the broader stock market also, there are pockets where earnings growth will be far more muted in the next couple of years than it was in the last 3 years. To that extent, even the correction in valuation of the last 6 months might not be making their share prices attractive enough. At the same time, there might be some spaces where the multiples haven't yet corrected. So bearing these parts in mind, some of the cash positions were increased in Little Champs and one of our other funds. But having said that, we will be actively deploying that cash as and when we find, as I mentioned, bottom-up stock picking. Many opportunities exist. As and when we are looking at those opportunities, we are actively deploying that cash as well. So net, yeah, it's good to be opportunistic in times like these, whether it be opportunistic about going in cash in SMIDs, but more importantly, how and when to deploy it.
All right, Rakshit, with this, we'll let you go on that. Thank you so much for taking the time out and helping us with your outlook on the markets and the sectors that you believe can do better.
If you like this video, then like, share and subscribe to ET Now.